Consumer durables company Crompton Greaves Consumer Electricals has sustained its earnings momentum and has also delivered a healthy growth in top line and bottom line in Q1. Let's do a three-point analysis of the earnings fine print and the outlook on the company. 1. What are the Q1 result highlights? Well, revenues for the quarter have increased by 12% year-on-year to over 1,300 crore rupees. EBITDA as well as profit after tax has actually come in ahead of the top line on the back of moderate improvement in margins. EBITDA has increased 25% year-on-year, while profit after tax rose 17% to clock in 122 crores as net profit. 2. What has contributed to the growth this time? Well, electrical consumer durables drove the overall top-line growth. Fans, pumps and appliances, the key product categories have delivered double-digit volume growth this time. A combination of hot weather conditions as well as premiumization strategy and market share gains have actually aided sales of fans in Q1 FY20. Now, in appliances, the new products such as geysers and coolers have gained traction in the market and have also reported exponential revenue growth of over 40% on a small base. Overall, segmental EBIT margins were supported by richer product mix and easing of the commodity prices. Performance of lighting and fixtures was quite starkly divergent to the consumer durable segment, as it reported a contraction in sales as well as margins. Now, delay in government orders due to the general elections along with the price erosion in the LED bulbs has had an adverse impact on the overall sales. Margins also took a hit on account of advertising spends, continued investments and higher bad debt provisions. Now, the company continues to focus on driving profitability through new innovative products such as antibacterial bulbs and rationalization of the cost structure. Now, it is also broadening its distribution footprint and looking to enter new product categories through the inorganic route. Now, despite the price erosion, LED volumes have been growing at a healthy rate, and this remains the key revenue driver for lighting business as well. 3. What's the outlook going forward? Well, consumer durables market is set for a major push given the low penetration level of electronics. The growth is being fueled by some recent trends like the electrification programs and the rising income levels of consumers across urban as well as the rural markets. Now, while the near-term demand trend suggests some weakness on the demand front due to sluggishness in the economic activity, the long-term drivers remain quite intact due to the shift in consumer preferences and also the changing lifestyles. Crompton's Q1 was ahead in comparison to its larger peer Havells. From a valuation standpoint of view as well, Crompton trades at a significant discount to Havells and also offers a favorable risk-reward ratio on a relative basis. Long-term investors must make use of any dips in the stock to actually gradually build positions here.